Hello, and welcome to the next lesson of Finance RM. This will be about basic financial terms. Firstly, transaction. This is an essential thing that happens day to day and is a type of exchange done with two people or more. This is called a transaction. When such is done for money, it's a business transaction. If you pay for something, that is a transaction. A financial year. Just like in the calendar year, there are 12 months, a business also has a business year or financial year, which can be used to calculate the profits. But it's not necessarily always from January to December and can range for different months for different countries. Accounting. Accounting is the process of recording financial transactions related to any type of business. To make it better and stronger, we present it in a way that it gives some useful information. And more things accounting can do is that it helps you track your income and expenses. It helps you make business decisions. It's useful to get loans from banks as you will need to provide all the details of all your assets, liabilities, etc. And the terms used in accounting: asset, which we have covered before, as well as liabilities, where an asset is something that might generate income, whilst a liability is something that you have to put back and use money into, something that uses money. This is a liability. Examples of assets and liabilities: an asset is simply something that generates money. For example, if you have a house on rent to someone else, that is an asset, whilst a liability would be your car, as you have to buy petrol for it. Investment is how you make more money. For example, if you put $10,000 with a company and you grow your money to 11,000, this is an investment. It can be done in many ways, not just banks, as well as things such as stocks and bonds. Expenses. When you spend money to get something in return, this is an expense. Businesses will have to spend money and keep track of their day-to-day business and make sure it is running smoothly, including paying the bill or enjoying connection. Whilst losses refer to the money lost by a business, where it can happen at day to day or any amount of time. Say someone pays less than the value of something costs, that is a loss. Income, on the other hand, is the money you make, which is not your profit, but is the total money that is received. And that is the way that money comes in. And profit is the extra money you gain, which is simply your income, which is your total money. Take away your expenses, the total money spent. The profit is that, and the capital is your total net worth for your business and any type of networking you have around it, and the liabilities. The capital is how much it is worth after paying everything else. Drawings is the reserval of capital and the money you take back from your business. A debtor is, say, someone is owner of a company, but they are short of some money. You let them purchase something, but on the promise they will give something, the money, back to you. So they are a debtor to you. And a creditor is the other way around. If you are the owner and someone comes to buy something, but they are short of money, then you let them purchase it, but they are in debt of you. Financial statements. A group of statements that shows all the assets, liabilities, cash flows, income, and expenses in a format. It shows the performance of business during the period of 1 year. 3 parts of financial statements: the income statement, which contains a list of all the gains, and the balance amount, which will be the income and expenses, will either result in a profit or loss. The balance sheet, it contains all the assets and liabilities that the business still has at the end of the business or financial year, and it will show the total assets will be equal to the total liabilities and capital. And cash flow statement is a statement that keeps record of your inflow or outflow of the business through various modes, and this statement can help you understand where the business is getting its cash from. Thank you, and remember to stay smart, be smart, and achieve your financial goals.